In the last video that I did on WIF, we absolutely nailed the bottom over here, and the way that we were able to come up with that entry was based on this 4-hourly demand zone. And for those of you who took this entry, stop loss, like we just barely managed to avoid getting stopped out in this case, but at the moment you would be up around 30% from the entry. Now, in this case, WIF is going to make a new all-time high, I believe sometime during this week or even next week. And the question now is, if you miss this entry, then where should you get in? And that's what I'm going to be covering in this video. Also, we're going to talk about the targets for WIF, in this case, all-time high, but like, you know, how much higher can it go? And guys, we have been on an absolute tear throughout the last couple of weeks, so to all of you who followed along and made money, congratulations. But otherwise, before we get into this video, the Black Friday discount for the AOC Alpha group ends in about 12 hours. It's essentially the place where I'm going to be giving you my exact trades, entries, stop losses. I'm going to be compiling all of the alpha so that you don't have to spend hours upon hours scrolling through Twitter without any guarantee of finding a hidden gem. If you have been struggling so far this bull run to achieve the results that you know you can achieve, then perhaps this is something that could be relevant to you. Of course, if it's not, don't worry about it. Only if you feel like these are problems you have and you want some help solving them. But otherwise, let's get into the video. WIF actually spent an extended amount of time just retesting this demand zone. In fact, we did so about 8 to actually 9 times before we eventually broke out of it. And this is a really big lesson in terms of patience, where yes, we oftentimes know where the entry is and we oftentimes know which direction is going to go, but a lot of people tend to get shaken out when they see consolidating price action just like this. And in a bull run, just understand that prices always move from periods of high volatility to periods of low volatility. For example, over here you have high volatility, you start retracing and then boom, right? You start going into a period of low volatility so that you can find a value area. What is a value area? Take a look at the right hand side of the screen here. This is known as a high volume node. Now, all this shows you is an area where market participants, both buyers and sellers, have agreed that this is an area of fair price for them to either sell or buy. Now, this is really important because the moment price leaves this value area, you can only imagine how many more open orders are left to be filled in this area. I'm sure a lot of you might have wanted to accumulate WIF, or maybe you were in the process of accumulating WIF, but the moment price shot out, okay, boom, right? Now, the reason why we're paying attention to this area of fair value is that the moment you break out of the value area, there are really only 2 things that can happen. First is you get a successful breakout, and you come back down to retest the previous value area high and you find support and you continue on your way. Now, the other scenario that happens when it comes to a value area is when you get a failed breakout. Essentially, in this case, the buyers attempted to push the price out of this area, but for one reason or another, they failed and price returns back into the value area to continue the chop. Now, similarly here, sellers tried to push the price below the value area and it failed to do so for whatever reason, and it returned back to the chop. Now, the way that you can tell if it's going to be a successful breakout or not is when you get like successful candle closures and price consolidating above the value area. Now, if you take a look here, this is the value area high. The moment you broke out of the value area high, you started consolidating above the area. This shows a willingness for market participants to maintain the price here. Now, if you take a look here, this is the value area high. If you just look at the volume profile, this is why this works like magic. And this is why you really want to be interested in learning how to do volume profiling, because this gives you just a hidden look behind the scenes and what's actually happening. Where is the volume being transacted at? And the moment you broke out of the value area high, you started seeing price maintaining above the value area, which also means that market participants now believe that this is the new area of value. The market participants at every given moment is always trying to find some kind of, you know, fair value, and it's always a tug of war between buyers and sellers. And the moment you get this kind of value area, or just a tight consolidation, that is when you know, okay, buyers and sellers have temporarily agreed that this is a fair price to transact volume at. So this was a telltale sign that the breakout was going to happen, and it's also a really strong indication that yes, we have indeed broken out. So in this case, there's really only 2 things that you can possibly do at the moment, and both of which includes some kind of a retracement. Well, there's a third thing, of course. Now, at this point in current price, you really only have 2 options that you can pursue. One is you chase green candles and just go long right away, praying that the price will continue towards the upside. Or there's a smarter way to do it, which is to wait for some kind of retracement, just like what we did with WIF when it came to this demand zone over here. And in this case, there are 2 main levels that I would personally be looking at. First of all, as mentioned beforehand, you have formed some kind of value area over here. You can see that the volume in this area is a little bit higher than the rest of the volume, but the ideal zone that you really want to get into is, like, this is ideal, by the way, doesn't mean that it will happen. If anything, usually the ideal zones have a lower probability of hitting, but if it hits, well, then you have a higher chance that that will be very close to the bottom. So in this case, the ideal zone is going to be right here at about 3.37. This will line up with the bottom of this block, but also you're just, entering this big chunk of volume right here. And so in the event that price returns back to 3.3, feel free to get in. The stop, as always, will be below the value area. Like in this case, that again, there are only really two things that can happen when it comes to a value area, especially after the price breaks out. The first of which is you come back down to find support at the previous value area high, right? You break out of the value area, come back, find support, and then boom, you continue the trend. The second is you break below, right? This will be a failed breakout. Price accepts back into the value area, and then it's going to get rejected at the value area high, triggering it as resistance, and then price is going to oscillate to the other side of the value area. Now, obviously, this is way lower probability compared to a value area like this, where you have not only a lot of time, but way more volume in terms of support. And this is a very recent one. It only really lasted a couple days before price broke out. So essentially, that makes this entire zone from 3.6 to about 3.3 an ideal zone for you to get in. Like, eventually, we know that the market is just going to go higher anyways. We are in the middle of a bull run, and WIF is going to go exponentially higher than what it is right now. Just to give you some form of reference, Shiba Inu went from $700 million of market cap to $22 billion in 4 days during the last cycle. There is no reason that WIF at the current market cap, which is about 3.7 billion, is not going to eventually hit 20, 30, even $40 billion. Heck, even Dogecoin right now is sitting at about $60 billion market cap. Even if this achieves just 1/3 of the gains of Dogecoin, you're still looking at a easy 5x from this point. So more of the story, price is going to continue higher, and you just want to be buying retracements at high probability zones. And in this case, we're going to utilize order flow. Now, everything that I taught you about in terms of volume profiling and even reading market structure in this way is just a fancy way of reading the trend and really understanding the behind the scenes of just price, right? There's candlesticks, and then you start volume profiling, and I know you get a much better picture of what's actually going on. And yes, for those of you who trade patterns, this is a rounded bottom formation. If anything, this could potentially turn into some kind of a cup and handle. So as of current price right now, I wouldn't be surprised if you saw some kind of a cup and handle like this, and then price moving out of it exponentially. Just remember that ultimately we want to be trading alongside the trend in a bull run. That is very simple because the trend is usually up more often than not. In fact, it is not just up, but it is exponentially up. And so that's going to be the breakdown of where you want to be getting into when it comes to WIF. So as mentioned beforehand, the long-term target for WIF is going to be multi $10 billion worth of market cap. But to find the more relevant targets for this trade, all you have to do is draw a fib from this low to this high right here. And we're going to look at standard deviation expansions. In this case, these present us with some relatively high probability areas where price could get rejected at, and to perhaps find some kind of top. And I do believe that this next leg on WIF is going to take us all the way to $10. But for those of you who want to take profit or are just a little bit more conservative when it comes to securing your profit and not leaving this bull run not taking enough profit, then these are going to be some good levels, especially if you're treating this more of like a trade than you are an investment. In this case, based on the original entry, if it hits $10, that's going to give you a 26-to-1 risk to reward ratio, which means that for every $100 that you risk, you're going to make 2,600 back. I don't know about you, but I would take that any day. And for those of you that are wondering why am I using standard deviations, well, the answer is simple. -0.5 and -1, as well as -2 standard deviation, they are not actually Fibonacci extension numbers, they're standard deviation numbers. Beautiful thing about standard deviation is that it's based on math. And an important fact to know about math is that the majority of the algorithms that the hedge funds and the huge funds like BlackRock and the investment funds, they use algorithms to execute their trade orders. And when it comes to algorithms, they're usually programmed on math. In fact, if you go through just a bunch of historical examples of standard deviation numbers, you will see that they oftentimes represent a really high probability area where bottoms/tops can be formed. And more importantly than that, these standard deviation numbers usually add up with key PD arrays such as fair value gaps, as well as a liquidity sweep. In this case, this is just one example. I can go through the entire list and you can see for yourself. Like, just to draw another one from this low to this high here, price extended half a standard deviation outside of the original range, and boom, right, that's the top, price retraces. And the reason also why we're using the 2.618 expansion is also because this tends to represent, especially for large movements, some kind of temporary top. For example, from this low to this high here, price finds a temporary top very close to the 2.618 Fibonacci extension. So these are going to be the targets for WIF. If you enjoy these analyses done on a smart money perspective for crypto coins, then make sure you subscribe to this channel, because I will be posting many more videos just like this. And drop a like while you're at it, it truly does help me out a lot. And lastly, Black Friday discount for the OC Alpha Group expires in 12 hours. We only run one promotion every year, and this is pretty much the cheapest price that you're ever going to get into the Alpha Group. So if whatever problems that I mentioned before is relevant to you, then check out the first link in the description box below. Otherwise, I'll see you guys in the next video.